in a straight line. And I asked you before we started, you've been out here for the summer. Have you heard a single negative quantitative metric about AI?
Yeah.
A single instance of deceleration?
Nothing.
Nothing. In fact, every metric is accelerating.
And to your point, not just blind optimism from people excited about AI,
Yeah.
but like, here's some data that they can show you.
Is it helpful to kind of like walk through the month, how we got here?
Yeah.
So first, there's Meta is going to rent out compute. And this is seen as like very bearish. They have excess capacity. They're going to cut CapEx. This is a disaster. This is not at all what it was. They just reported they didn't cut CapEx. What it was is they saw SpaceX have a big installed base of compute and sell some big trading optimized clusters into the market at a truly massive premium to these contracted rates. And at least the analysts like that. They saw an opportunity. There's a lot of speculation they're going to raise capital. So maybe what they were thinking is like, hey, we will show on a small chunk of capacity that we can generate really strong IRRs. Then we'll go raise equity capital and we'll be off to the races and probably raise CapEx. It doesn't look like that's what they're doing. But nonetheless, the market sold off because it interpreted this very negatively. And I was really sure it wasn't negative. There's a lot of telemetry into Meta's CapEx plans. None of that telemetry had shifted at all. If anything, it was, continuing to get more aggressive. And then shortly after that, they released their best model in a long time, Muse 1.1, which is actually really a very good model. I mean, it was overshadowed by Grok 4.5, but it was a good model. Way better than anything in 2 years. So just no chance they're taking their foot off the gas. Then Kimi comes out. And then there's this huge freak out about open source. And at the same time, this Silicon Data token index kind of dips and flattens. And the two are connected with the Silicon tokens. And for whatever reason, the market thought this was negative, but the reality is a token is a token, and you need the exact same amount of compute to make a token, all else equal. It takes the same amount of flops, the same amount of memory, the same amount of watts. Now, tokens are not equal, but broadly speaking, all open source taking share does is kind of take margin dollars out of the frontier model layer, and effectively thereby, there is elasticity, thereby driving token demand. You need more demand for compute. And the margins, Anthropic and open source, they all run on the same underlying cloud providers who charge the same amount of compute. So you're literally just taking margin from frontier models and essentially driving more margin dollars into the AI infrastructure layer. And I think that
was the catalyst.
Well,
this combination of things.
Well, yeah. Then it kept. It's like Jensen. I think that
was the catalyst.
Well,
this combination of things.
Well, yeah. Then it kept. It's like Jensen is the world's largest supporter of open source. Do we really? And he's like a super idealistic guy. He's a patriotic American. I think he always does what's right. But does it really stand to reason that Jensen would be the world's biggest supporter of open source if it was bad for his business? He'd still support it if it was the right thing for the world.
Yeah.
But maybe it wouldn't be his signature issue.
Yeah.
And by the way, I think open source is really important to worlds where there's just one or two dominant frontier models that charge like 90% margins. Yeah. It's not good for humans. It might not be good for society. And I think we want a lot of models, as we've discussed before. So then it's like, okay, the market digests that and comes to terms with it. Then China has a DUV machine. And this causes, everybody's in these baskets. This causes a huge sell-off in semi-cap equipment. And then we get to what I think is, in a lot of ways, like the real concern, which is real yields have gone up, which makes sense. We're investing a lot to fund this investment. And for sure, credit is an increasing part of it, even if the majority is still funded, overwhelming majority is still funded out of operating cash flows. And so real yields go up and spreads widen. Meta priced a bond last week, and it did not price where you would think a Meta bond would price. And this just shows that the credit market,
NVIDIA CDS was blowing out.
all of these CDS for everybody is blowing out. And very smart private capital people just like that. Hey, this is just exactly what you would expect. These are just banks, kind of hedging their commitments, but nonetheless, it doesn't look good. And these are undeniable facts. CDS is up, spreads have widened, real yields are up. And that would be really, really scary if we needed debt to finance this build out. And that's where I think it's this differential between spot and contract pricing for the installed base of compute is so important. So it's almost like we're back to, in stock market terms, like there's never really been this way in the stock market before, but people talk about the fragmentation of media and how it used to be like Walter Cronkite was the only voice of truth, and now we don't have that anymore. It's like Claude is kind of Walter Cronkite for the stock market, and everybody just believes whatever it says. And this is leading to
That's funny.
Really, and by the way, it's really smart, but it's not always right. It would react to that instantly. That would be worrisome if it started to get to be really easy to get GPUs. I mean, have you heard anyone say they have too many GPUs?
No.
Like not a single person.
No,
and it's not
in fact, it's the opposite. It sounds like a drug market or something.
Yeah, it really does. It's just wild. But yeah, I mean, I think there's a long list of pretty obvious things. If like Anthropic, OpenAI, if the sum that this is like the axis around which kind of everything is revolving, man, like you might blow up your entire business and your franchise by breaking an LTA. And that was never the case before. Apple, who cares? They're buying, they don't have a competitor. They're overwhelmingly the largest purchaser. They know they can do whatever. This is, going back 3, 4, 5 years. They know they can do whatever they want with no consequences because their volume is so big, that even if they like super screw Hynix, Micron will of course take them. This is just different. You have at least 4 players. Then you have all the startups. You're an investor in Etched. And if you break an LTA, and that they just say, okay, fine. You know what? Great. You broke the price agreement. We're going to break the volume agreement. And, screw you. We're going to give the volume to your competitor. You just lost share, So I think I think, NVIDIA's dominance, I think is, I think the current environment, the extent to which it favors NVIDIA, it is a little hard for me to understand why it's trading at such a low multiple. In other words, if you need to be able to finance the chips, and you do, nothing's more financeable than an NVIDIA GPU. Nothing. If you need to get, land and power, well, they're doing a very good job of playing that chess game and matchmaking. And then they've kind of rolled out this really clever, new business model, which I would describe as kind of like a credit wrapper with a revenue share if GPU prices are above a floor. Yeah. And this could lead to them having a really giant cloud business effectively through royalties really quickly. And it is another way of kind of alleviating this, cash flow mismatch. Hey, we're making all the cash. Yeah, and this isn't really vendor financing because they're not loaning them the money. Somebody else is loaning the GPU buyer the money. So it's not quite vendor. It's not vendor financing. It's they're still making equity investments, but it's not like you're just putting money into someone in return for the and then some of that money is used to buy your chips. Even though NVIDIA said that they write into all their equity investments that, the money can't be used to buy NVIDIA chips, but obviously money is fungible. And
funny thing.
What's that?
It's just like a funny little thing.
Yes.
Makes no sense.
Yeah. But, I think at some level, it probably makes everybody feel better.
Sure. What would you do if you were the member, if you were the CEO of Hynix?
I'd do the exact same thing NVIDIA is doing right now.
Which is?
I would be going.
I say,
I would be
finished.
going to the buyers of GPUs, Tritiums, and whoever, and saying, I'll participate in the NVIDIA credit wrapper. Now, their business is just inherently less stable and predictable, but in some way, and maybe they just put up some cash up front, so it's like they're not on the hook. They're not, I mean, I'm just making this up. But like, do something like you can, because you have money now and credit markets are revolting. There are many, the people, I'm sure our friends at, Blackstone and Apollo are suggesting some variant of this to the memory companies. But hey, we will like put up some amount of money from our cash flow today, and then it's gone. It's, surety that, makes the person who's extending the debt feel better. But we want some sort of a cut of the ongoing revenues as well.
Right.
Like that is like 100% what I would do. And it's almost like a logical extension of, the LTAs where they're kind of trading upside for durability. Yeah. Here, you could effectively get a royalty on recurring revenues. And that is what NVIDIA is doing. And I do think that is very misunderstood. And I think it would serve NVIDIA well to really explain this. One, they're really bullish on AI. Essentially, every time they haven't taken an equity stake in something, it's been a mistake.
Sure.
They've taken equity stakes in everything essentially, except the memory companies that for a long while Anthropic, that they took an equity stake in Anthropic. But like, why not if you have cash flow and you're bullish on AI and Jensen because he sees every lab, he knows all the advances, like all these continual learning labs, Safe Superintelligence is now working with them.
Regulatory, is it some sort of like?
I think regulatory has to be the biggest risk. It's the most obvious risk. And so that was kind of one reason I was excited to be here this week, was to just like, I want to be scared, I don't want to feel like a lunatic, watching these stocks relative to, get more cheaper, thinking the expected forward returns are going up, while, it feels like the on-the-ground fundamentals have like pretty materially improved in July relative to even June. But I still can't come away thinking like, regulation, it just has to be the biggest risk. Like you just can't ignore New York making a data center moratorium. And just like we're living in this weird post-factual, post-logical political world. And, I think the AI industry, it has done a terrible job of PR. And I do think
I think it at least realizes that now.
Yeah.
Maybe if not fixed it, it realizes it.
Yeah, but like kind of the narrative in Washington, the political narrative, I think amongst a lot of ordinary Americans is like data centers. They're going to raise your electricity prices. They're going to take all your water, and then they're going to take your job. And the reality is, like, given the deals that are being cut now, when a data center goes in, electricity prices actually generally go down for everyone around there because of behind the meter deals. And this is that like data center pledge that kind of Trump asked people to sign. Generally, the data center developer, it used to be they just had to build a whatever. They had to get the police department and the fire departments like, new trucks and new cars and, new body armor or whatever. Now it's like, well, we're going to build you a hospital, a school, a new police station, and a fire station, and we're going to lower your power bills. How does that sound? And by the way, the jobs are ongoing because it turns out that you kind of need these plumbers, electricians, HVAC contractors. And this is like data centers are in a lot of ways the best thing to happen for blue collar wages in my lifetime. And yet you have the Democrats who ostensibly represent these blue collar workers taking those jobs away. And so, and also like, it's just kind of wild how like, what is the phrase? Like a lie could go around the world to,
Faster than truth gets out of bed.
Yeah, faster than truth gets out of bed. but an author made a mistake in a book and overestimated the amount of water usage in data centers by 10,000x. Not a little bit, like not one order of magnitude, not two orders of magnitude, not three, and she's admitted that mistake many times. I was completely wrong. It's like been super debunked.
It's like the Popeye effect. Did you ever hear that example?
No.
The Popeye eats spinach. The reason was same deal in an academic book. They placed the decimal two things wrong. So spinach does not have more iron than everything else. It was just this one source, and then that propagated. People still say it has more iron.
I thought it had more iron. I mean, that's wild.
Like 80 years ago.
That's wild. I